How do insurance companies make money? Have you ever stopped to wonder, how do companies make money? I mean, they're out there paying for car repairs, hospital bills, and even home rebuilds. Yet they're still some of the most profitable businesses in the world. Sounds a little magical, doesn't it? Well, let me break it down for you in a way that's super easy to understand. Premiums, the foundation of insurance profits. The first and most obvious way insurance companies make money is through premiums. When you buy an insurance policy, whether it's for your car, home, or health, you agree to pay a monthly or yearly amount. These premiums go into a big pool of money that the insurance company uses to pay claims. But here's the trick. Not everyone makes a claim. For example, you might go years without having a car accident or needing to file a home insurance claim. During that time, the insurance company keeps collecting your premiums. In fact, they rely on most people not making claims to stay profitable. This is what's called the law of large numbers. With so many customers paying in, the company knows it can cover the few who do need payouts while still keeping a chunk of the premiums as profit. Investments. Making money. Work harder. Here's where it gets even more interesting. Insurance companies don't just let all that premium money sit in the bank. Oh no. They invest it. Insurance companies put their money into things like stocks, bonds, real estate, and other low-risk investments. The goal is to grow that money over time. Even if they have to pay out claims, they've already made extra income from these investments. For example, if you and a million other people pay $500 a year for car insurance, that's $500 million sitting in the company's pocket. They invest it wisely, and even a small return can mean millions of dollars in profit. Underwriting and risk assessment, the secret sauce. Insurance companies are also really smart about who they insure and how much they charge. This process is called underwriting, where they evaluate how risky you are as a customer. If you're a safe driver or live in an area with low crime, your premiums will be lower because the company knows you're less likely to file a claim. On the flip side, if you're a new driver or live in a hurricane-prone area, your premiums will be higher. This balance ensures they're charging enough to cover potential claims while still making a profit. So, how do insurance companies make money? It's a mix of collecting premiums, investing wisely, and carefully managing risks. They've got the whole system down to a science, ensuring they stay profitable while keeping us protected. Do you think insurance companies have mastered the art of making money while offering peace of mind? Share your thoughts in the comments below. Thank you for watching this video. Please don't forget to subscribe and turn on the notification bell.